All right, so this is the last video of the BRRRR series. Today we're gonna spend a lot of time talking about the refi of the property. After you guys get it all done, you're gonna refi, and then we're gonna talk about the repeat process. All right, we are at the headquarters of Springboard Funding. We're about to go upstairs right now. We're gonna meet up with some of the head people that help run Springboard Funding, and we're gonna actually talk to them about hard money lending. We're gonna talk about how to refinance out of your hard money lending into permanent financing. We're gonna talk about repeating the whole process over and over. Let's do it. We are at the Springboard Funding headquarters. Matter of fact, this is my first time actually seeing it myself because, they've been remodeling it and it's beautiful. But I'm here with my man, Derek. He's the person that a lot of you guys, when you actually applying for hard money lending or construction lending, this is who you guys talking to. He's one of the person that you guys are talking to. So I want to make sure that you guys see how he look like. But we're gonna go deep today in the refi, and we're gonna talk a little bit about the repeat. So, you ready to do this, bro?
Let's do it.
All right, before we go into the refi, let's talk to them about the process of how to get a loan. Because now they got the house already remodeled, they got the renter already in. Now they want to refi and get out and pay off the hard money lender, and then basically get into a 30-year loan product. If they find a fixer, we ask them for 20% of the purchase price and the rehab. So rehab is, purchase is $400 and the rehab is $450, then we ask for 20% of that.
Exactly.
What do they need to qualify to get a loan to actually do a fixer-upper with Springboard Funding?
Yeah, the great thing about Springboard is we're focused on real estate investors, so we are actually underwriting based on the property itself.
Okay.
So in terms of qualifications, it's very simple. You need a credit score of above 680.
680.
And you need the liquidity for the down payment and closing costs. As long as the property is located in any sort of major city, it's fair game.
They don't need experience?
No experience, no W-2s, no income verification, liquidity for the down payment and closing costs.
Okay, so once they get the loan, how long does it take for us to process someone's loan these days?
We can close a loan in less than 2 weeks, 1 to 2 weeks.
Okay.
On a fix and flip.
All right, so once they get the loan, they close on it, they gotta go and rehab their property, and now that's all done, it's leased up. Now they're at this point where they wanna refi. Now, the biggest thing everybody keep talking about, Bruce, everybody keep talking about this, is, but they changed the rule, right? It used to be 6 months of seasoning. Freddie Mac said now it's 12 months. Let's talk about that. What does that mean in the first place? For a lot of people who don't understand that.
Yeah, so the way the seasoning works is people, on the Freddie Mae and Fannie Mac side, they make you hold your property for 12 months before you can refinance. With Springboard, you actually don't have any seasoning requirements. We can refinance within 3 months. We can refinance within less than 6 months, or even less than 12 months, obviously. And
So
you can cash out your equity that you've built up, or the cash that you've put into the property. You can get back in 3 or 6 months without having to wait for that 12-month seasoning, so you can get your cash, find another property, and do it again.
Yeah. Before this rule, if you went and bought a fixer up and you got it all renovated, you rented it out, and now you gotta wait 6 months before you can actually do what I call a refi cash out, get your down payment money, get some equity out of it, take the cash and do it again. Well, when Fannie Mae and Mac said, no way, man, no way, you gotta wait 12 months. That kicked up a lot of people doing BRRRR because they can't wait 12 months. They want their money back out. And this is why we have this problem. So when I started talking with the co-founder of Springboard Funding, they're like, let's create a product. So there's two, let me just clarify this. There's 2 ways we can do it, right?
Yes.
Explain the 2 ways.
Yeah, there's 2 long-term loan products that we have.
For 30 year, right?
30-year loans,
Yep.
Long-term, similar to a normal mortgage. One loan product is where we underwrite based on the cash flow of the property. That's what we call a DSCR loan, debt service coverage ratio. And then the other loan product is where we underwrite based on you as an entrepreneur and the income that you make for your business. So we'll actually underwrite based on your debt to income ratio.
So let's say someone's property isn't cash flow, but they got a good personal, strong finances. We can do a 30-year loan for them.
Absolutely.
And they don't have to wait 12 months.
Absolutely.
That's a game changer. Or if their finance is a little bit on the weak side, but their property cash flow, we can help them refi again sooner than 12 months. If they got done in 3 months, we can refi for them.
Yes, we can refinance with you in 3 months, get your cash, and then go to the next property.
So folks, this is a game changer, okay? I don't know what other people are offering. I know this is what Springboard Funding is offering, okay? So there should be no excuses for you to go out there and do the BRRRR model, okay? If you guys need loans, again, to purchase the property and now do a 30-year takeout loan, we can help you with that. Let's talk about the last R called repeat. We talked a little bit about, at some point, Freddie Mae, Freddie Mac says the most you can get is 10 loans. But some people, they can't even get to 10 loans because their debt to income starts to max out.
Absolutely.
What can we do for Springboard to help these folks?
With Springboard, we've identified that real estate investors want to buy many products and they don't want to be capped at 10. So we actually don't have a limit on how many loans you can do with us. As long as you have the liquidity for the down payment and closing costs, you can keep coming back to us and we can do unlimited loans for you to continue to help you grow your portfolio.
So if someone want to do 10, 20, 30, 40, 50 loan, we can do that for them.
We can do that for them, absolutely.
So folks, again, why I am making this video for you guys is to show you guys that if you really, really want to do the BRRRR model and you really want to grow your real estate portfolio, if you are committed, the solution's always there. If you're not committed, you always find excuses and problems.
Yep.
We can help you guys how to grow your real estate portfolio, especially do the BRRRR model. The BRRRR model, to me, in my opinion right now, this is what I call the interest hack. Right now, interest rate's high, but if you find good deals right now and you can get decent rate, but the key is you got to get a good deal and you got to do value add property and you can get someone to actually help you get a loan and also do the takeout for 30 years. And if it cash flow, folks, you got it made. This is why we're doing this video, show you about the refi, okay? So I think other than that, bro.
Yeah, I would say too, just to kind of, as you know, we work with a lot of repeating clients and most of our business is repeat clients. So we do have a rinse and repeat model. The first loan might take a little bit longer, but the second, third, fourth, fifth, sixth, we can underwrite faster and close quicker, so.
Let's just also say this. If they want to actually apply, even if they don't have a deal right now, let's say they wanted to apply just to be part of the Springboard funding, so when they ever get a deal, we can get them pre-approved and get a loan to them quickly, right?
Absolutely, yeah. You can sign up, create an account in 5 seconds, get pre-approved in 1 minute, and then you have a proof of funds letter that you can take out to a seller or a realtor and start submitting bids on properties.
If you got to get pre-approved before you find your deal, when you find your deal, you don't have to go get approved. You're killing time. Get the pre-approval in advance. As soon as you find a good deal, go make the offer. You got the letter already. And the process is much quicker to close the deal. We're going to put the link in the description below for you guys to actually go and get your free account, all right? But I think until then, I think that's a wrap.
That's a wrap.
All right, good job, my brother.
You too,
all right.
man.
All right, if you guys like the video, make sure you give us a thumbs up. If you have any comment below. All right, make sure you guys hit that subscribe button. Until next time, we'll see y'all soon. Peace.